Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring. Today is Saturday, March 19th, 2022. I appreciate you coming here and listening to my weekend update podcast, where what I'm going to do is I'm going to talk about the trades that I took last week, when I bought them, why I bought them, how I'm going to manage the trades moving forward, either to the upside or to the downside. After that, we are going to talk a little bit about trader psychology, most important skill in trading. It really is, everyone. If there's one thing that you take away from the podcast today, it would be the fact that in order for you to become a long-term profitable trader, which is everyone's goal, obviously, you have to be able to create a trading plan based upon good trading principles, cutting your losses short, letting your losses run, position sizing for volatility, knowing where overhead resistance levels are, taking profits on the way up. That's the way that I trade. So putting together a trading plan with good trading principles is extremely important, but then you have to follow the plan. If you can't follow the plan, if your emotions get in the way, and it disrupts your plan, it's going to disrupt the chances of you becoming a long-term profitable trader. So I always like to talk about trading psychology. It's extremely important, and we'll spend a few minutes on that. After that, we are going to visit a trading poem from my good friend Frank, who is a great poet, a great trader, and always writes completely relevant poems to what's going on with the current market situation. So I want to cover that. After that, we are going to come back. We're going to go down through my entire watch list of stocks. We're going to go down through each one by one. We're going to take a look at the current structure. And what I'm going to do is I'm going to identify some stocks that I will be looking for next week to trade based upon certain levels. And usually, the stock is going to have to go higher or lower for me to get interested in it. But I will go through each stock one by one, mark the ones that have some potential that look likely for next week that might be actionable. All right, and hopefully that will be helpful for you, get an idea of how I trade. And we had some good trades this week. We had some really good trades this week. Finally, the market had a nice sustained rally, which were good for swing trades. It's been very difficult for swing trading lately, but this last week was great. And like I said, we'll go over each position that I have, talk about when I bought it, why I bought it, how I'm going to manage it going forward. I do trade on multiple time frames, so I have trades on the daily charts, I have trade on the weekly charts, I have trade on the monthly charts, and so we'll go through those and I'll explain how I'm going to manage those. All right, before we get started, I have to run the U.S. legal disclaimer, so if you can hang tight for about 40 seconds, I will be right back. See you in a minute. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. Okay, thanks for holding on. Let's get started. Okay, if you watched the podcast last week, you did hear me mention Apple. I've been very patient with Apple. I really wanted to buy Apple here with some kind of rejection of the 200-day moving average, and it came down. I just want to be patient, but if you remember from last week, this was my favorite trade, some kind of rejection of the 200-day moving average, and it worked out nice. I bought this back on the 15th of March, where on the previous day on the 14th, we had to close under the 200. Then we had to close over the 200. That was my entry signal. Also, I believe that was an under 30 over 30. Let me go back and take a look. No, It was not. It was simply a close under, close over the 200-day moving average, and it also did undercut this previous low here. This is the low of the range. A low of the range for me is whenever you have a low with a higher low to the left, a higher low to the right, that creates a range. What we did the previous day before I bought this, we came down, we tested a new low, we tested a new lower range, and it held, but the next day it rejected it. So there were not enough sellers down here in order to keep it going down, and that's why we reversed back up. So we had a false breakout from the downside or an undercut of the previous range over here. Then we had a close under, close over the 200-day moving average. Of course, I have my emergency stop way down here, 2 ATRs. I'll get into that in a little bit later. So that was my emergency stop in case it all hit the fan. My end of day stop would have been a close back below the 200-day moving average. Fortunately, did not happen. I entered here on the 15th at 155.50 exactly. And you can see it has moved up nicely from there. So far in the trade, up 5.2% on this trade. Another thing I want to mention is that I do always take partial profits each day based upon the previous day's close if it moves up a certain amount. The certain amount for me is the value of the 0.45 ATR. I take off 10% of my position. So if I entered here with 100 shares and then the next day it moved up, looks like I probably hit 2 profit targets on that. So I took off 20% of the trades. The next day didn't go up enough to hit a profit target. On Friday, of course, we had a big rally and I did take some off. So I always like to play offense and defense in my trading. Defense is going to be my emergency stops, going to be my end of day stops, going to be my trailing stop modes. Offense is going to be selling to the upside into the strength, because whenever the market gives me a certain amount of movement to the upside or profit to the upside, I want to lock in a little, not all of it, but a portion. Another interesting thing to note here is that you see this orange line, the 163, that is 1.5 ATRs to the upside from my entry point. Whenever I enter a trade, if it moves 1.5 ATRs above my entry, then I switch modes. I go into trailing stop mode. So what does that mean? Trailing stop mode means that now that we've reached that level, if in the future I get a close below the previous day's low, I will take off half of my position because it has moved 1.5 ATRs, or in other words, it's moved outside of noise. If it moves less than 1 ATR or just 1 ATR, that's the average amount that it's expected to move. That's the average rain on a daily basis based on the last 20 days. But if it moves 1.5 ATRs from my entry, then it should not come back. We are outside of noise. So, if we were to come back down here, most likely what would happen is we would at some point have a close below a previous day's low. That would be a warning sign. And I don't want to give up all the profit that I have in here, the 5.2% profit. So now I am in trailing stop mode. If I get a close below the previous day's low, I will take off half of the shares that I have remaining. Now remember, if I bought 100 shares here, I'm taking partial profits as it moves up. So I don't have, I didn't buy 100 shares, but if I did buy 100 shares, I probably took off, 20 shares here, 20 shares here, 20 or 30%. And so I've locked that in. And so if it comes, let's just say it's 20% and I have 80 shares left. So if we came back down close below the previous day's low, I would get out of half of whatever remaining shares I have after taking into account the profit targets that I had. So great trade. Glad I was patient on Apple here, waiting for the close under, close back over, or any kind of rejection of the 200-day. It's worked out very nicely. And I am in trailing stop mode. So next week, if we get a close below the previous day's low, I will sell half. If it just keeps moving up, great. I will just keep it. Next levels to the upside that I would be concerned about would be a 65 RSI. If we get to a 65 RSI, that means we're in a nice strong trend. I would use the 5 EMA as my trailing stop level to get out of all of it. If it holds the 5 EMA and just continues up, if it rejects the 70 RSI, Then I would sell half of my position, and then I would get out of the remaining position with a close under a previous day's low after rejecting the 70 RSI. So great trade, up 5.2%, and we'll see what happens next week. SPY. All right, so I did buy SPY here. I bought SPY here on the 16th of March with a close under, close back over the 300-day moving average. MACD was also positive. We had the red line crossing, or the green line crossing over the red line here. So those were my indicators. I like a combination or confluence of indicators before I enter a trade, not just one signal. On Apple, we had the under 200, over 200, rejection of the previous low of the range. That was my confluence of signals. This one was a close under, close back over the 300-day moving average. It does back test well. My emergency stop here was 2 ATRs from my entry, and I'll go over that in a minute with the new position that I took on Friday. My end of day stop would just have been simply a close below the 300. In trading, what you want to do is you want to identify confluences, combination of indicators lining up at the same place. You want to have a line in the sand. In this case, my line in the sand was the 300-day moving average. We were able to close above it. Now we have the support below us, right? I always want to buy with support below me instead of resistance above me. That's why I was waiting for the close over. You can see back here on the 9th, we came up, rejected it to the upside. See how that was the resistance to the upside? A couple days later, it looks like it tagged it, came back down. Now, finally, something has changed where we can get back over. Doesn't mean that it can't go back down. You can see over here, we had a close under, close over the 300. Did work out for a while, but then ultimately failed. I like this a lot better because MACD is green. Back here, when we had the close under, close over, we did not have MACD. There's some significant resistance levels coming up here, 200-day moving average above us that we're going to have to overcome. Also, something to note, we had a 50 SMA cross under the 200 SMA. That is what is considered what they call a death cross. And longer term, generally that's a bearish thing, but we'll see what happens. You can see the my trailing stop level on the SPY trade is at 449.70. Have not reached this. So if we close below the previous day's low, I would still be in the trade because we have not reached 1.5 ATR trailing stop level. If we have another update on Monday and it reaches that, then I will go into trailing stop mode on that as well. SPY pretty good in 2 days here, about 2.13% profit. All right, LEG, L-E-G, Leggett and Platt is a new position that I took on Friday. Now, in the past month or so with the podcast, most of my trades have been deep dip buys because the market has been so low. This is a different type of trade. This is called a higher low V1. I teach this in my one-on-one classes. It's a great approach with a good risk to reward ratio, but basically we have a close under the value zone. The value zone resides between this green line and this green line. We had a close under, we rallied into the value zone, came back down, came back up into the value zone. Here on the day that I bought it on Friday, we had a V1. A V1 consists of 2 bars. We have bar 1, bar 2. Bar 2 goes below bar 1's low and then closes above bar 1's close. So we go below bar 1's low by at least a quarter ATR, which happened here. Then we have to close over bar 1's close. Plus, this was a bullish engulfing bar as well. So MACD was green. I like that. So I did buy this here at 37.04. And it is 36.98, so it's slightly down. I bought it right at the end of the day. Do want to point out that on my swing trades, I do buy at the end of the day, right before the market closes. I feel like the closing prices of the day are the most valid During the day, you have the algorithms, you have the day traders. They are the ones that are control of the market. They are moving it around. At the end of the day, the large financial institutions come in. They're dealing with the most money. They have very smart people, best information, best technology, and I consider the closing price to be the most valid price. And so that is why I wait for my swing trades until the end of the day. So I did buy this at 37.04. It's 36.98. Now you might notice here I have 3 lines. I have the 2 ATR line down here. This is my emergency stop, and I'll go through that with the calculator in a minute. We have the 1.5 ATR trailing stop above my entry. If it gets there, I will go into trailing stop mode. And this red line in the middle here, that's my end of day stop, meaning that in the future, if I get a close below halfway, and you can see the line is drawn halfway of this bar, if I get a close below that, I'm just going to get out of the trade. If it keeps above that, I will keep it. Of course, I will scale out of my position if it starts to move my way. So the trade plan here was a higher low V1, entered at 37.04. Emergency stop, 2 ATRs below. End of day stop if we close below halfway of Friday's washout bar. That was the entry for the trigger. And then, of course, I have my 1.5 ATR trailing stop up here. Now, I like to do this each week because as my students know, it's extremely important that you position size based upon the market's current volatility. If the market is extremely volatile, then you need to buy fewer shares. If it's less volatile, then you need to buy more shares. A lot of traders don't do this. They just set a set amount, and if volatility increases by 2 times and you normally buy 100 shares of something, if it increases by 2 times, it's essentially like you're buying 200 shares. So you would need to reduce your position size from 100 to 50 just to make things equal. And the good news is that using the 2 ATR, the value of the 2 ATR, it accounts for all of that. So what you first have to do is you have to take a look at your total account balance. Let's just say it's $100,000, okay? Or let's just say it's $50,000. What I like to do as a general rule of thumb, is I like to take 1% of whatever my total capital is. If it's $50,000, 1% of that is $500. That is what I've decided is going to be my maximum allowed loss on this trade, regardless of what happens. If you have $100,000, 1% of that, it's going to be $1,000. It's a good rule of thumb. I actually use less than 1%. I use about 0.5%. But for this example, let's just assume we're dealing with $50,000 account. 1% of that is $500. All you need to do is take, in this particular situation, right? If you have a $25,000 trading account, 1% of that would be $250, right? So let's just stick with the $50,000 total account value. 1% of that is 500. Let's take 500, divide it by the value of the 2 ATR. This is 2 standard deviations. It should not hit that, but if it does, you need to get out. So 500 divided by 2.3 would tell me to buy 217.39 shares. I would just round down to 217. So if I bought here, like I did on Friday, if it comes down to the emergency stop, it will have moved 2.3%. I just did the math by sorry, not 2.3%, but 2.3 is the value of the 2 ATR. So if I buy 217 shares and it moves $2.30 down to my emergency stop, how much will I lose? 500. So that's the amount that I said, okay, I'm okay to lose that because it's a small percentage of my account. It's way outside of noise. If it goes down there, there's definitely something wrong. So, from a percentage standpoint, let's take a look and see what that would be percentage-wise. That's 6.08% loss. Well, don't worry about the percentages, because if you use the 2 ATR to position size, the maximum you're going to lose, unless you have some huge gap down there, that's always a possibility. But most of the time, it will not reach 2 ATRs below. But if it does, I get out immediately. I don't wait for the end of the day. If my emergency stop is hit first thing in the morning, I am out. I don't care what happens. I have to follow my rules. Okay? Makes sense? So anyway, higher low V1, bullish engulfing bar, MACD is positive. Emergency stop down here, 34.74, which is $2.30 below my entry. End of day stop, halfway of this washout bar, halfway of the bar that I entered with the V1. Bar 1 has a low, bar 2 goes below that low, bar 2 closes above here, also closed above 50 RSI, which is also important. So this one very, very slightly down on the trade because I bought it at 37.04. It's down 36.98. So I'm down 6 cents on the trade. So we'll see what happens with that for next week. I also mentioned a little earlier, I do like to buy on multiple time frames, dailies, weeklies, monthlies. Dailies, of course, are just the making a decision at the end of each day. Weekly trades, making them on Friday because that's when the weekly bar closes. And I did this on Meta, which is Facebook, on Friday because it was Friday. It was the end of the week. What were my entry signals? Well, my entry signals were actually, technically, if you want to get into it, 4 entry signals. We had a close under last week, under 30 RSI, closed over 30 RSI. That's 1. We had a close under the 300 SMA, over the 300 SMA. We tested the low of the previous low here, or the previous range. Remember, a range to me is a low with a higher low to the left, higher low to the right. We did come back down. We tested prices in that new low, got rejected, and we also had a close under over the negative third ATR channel. Negative third ATR channel is this line here, the Keltner channel. So lots of confluences of signals. That's what I like to take before I enter any trade. The more buyers you have, the better, the more groups of buyers that you have, the better chance that you are going to have a profitable trade. That's really it. If you're the only buyer and everyone else is selling, right, to take it to extreme, you're going to have a very difficult time making money on a trade. But if you're in the company with as many other groups of buyers, it will help improve your chances. And again, the signals here, there was a group of buyers that came in with under 30 over 30. There was another group of buyers that came in with a close under, close over the 30 RSI. There was another group of buyers that came in because of the rejection of the previous low and the under negative third over the negative third ATR channel. 92% of prices hold when they get down to the negative third ATR channel. Not all the time. You can see here, right? This big bar came down under the negative third, never went back over until now. So I did buy this at 216.01. It's 216.50. I'm up 0.2% on the trade. This is a weekly trade. Of course, I have my emergency stop down here. Now look, percentage-wise, this is going to be a big move, right? This is going to be a 23.74% move if I hit my emergency stop. Sounds like I'm going to lose a ton of money, right? No, because in our example, taking the $50,000 trading account, 1% of that, $500. Let's do the math one more time. Take 500 divided by the value of the 2 ATR, which on the weekly is going to be very large, which makes your position size very small, divided by 51.41. In this case, it would have me buy 9.72 shares, or in other words, 10 shares. So if 10 shares basically move 51.41, it's going to be approximately the $500, which would be a very, very small percentage of my account. 1% of my account, if it hits my emergency stop, what did we say? It was 23 or 24% to the downside. I had someone ask me, they said, well, if it moves 20%, you're losing more than your 1% that you said that you wanted to lose. But that's not true. It has to basically move 23, 24% in order for me to lose 1%. So the person that asked me that question, hopefully that will clarify. So if it gets to my emergency stop, I will lose the 1%. That is it. Now, so that's my emergency stop. If it happens on Tuesday, I get out. I don't wait for the end of the bar. So I told you about the entry signals. Where is going to be my end of day stop? My end of day stop will be a close below the 300-day moving average, because that's essentially why I took the trade. All right, so hopefully it doesn't come all the way back down here. Hopefully it moves up, gets to my trailing stop level, which is up at 254. Once I get to 254, or if it gets to 254, then I will go into trailing stop mode like the rest. So anyway, that's my new weekly trade that I took on Friday. Another weekly trade that I took all the way back here, looks like on 128.22, is the Russell 2000 on the weekly. What were my signals? My signals were an under 30, over 30, intra-bar. It went under 30 and over 30. It also rejected the negative third ATR channel. And like with all of my trades, I still have my emergency stop. That's all the way down here. That was the value of 2 ATRs from my entry, right? Luckily it didn't hit that. Where's my end of day stop? My end of day stop would be a weekly close below the 30 RSI, because that's why I took the trade, right? The confluence of the signals I had was an under 30, over 30. Cherry on top, or what helps improve the trade, was the intra-week rejection of the negative third ATR channel. I wouldn't buy just with the rejection of the negative third ATR channel. I need a rejection of a moving average or the 30 RSI. So bought here, 193.20. I placed my trailing stop level up here. I have my emergency stop here. My end of day stop would just be a weekly close below the 30 RSI. Never happened. This particular trade, this weekly trade here from entry to exit, up about 6.82%. So really nice trade. Been in this for 1, 2, 3, 4, 5, 6, 1, 2, 3, 4, 5, 6, 7, 8. So I've been in this trade 2 months. It's been a great month. A great 2 months here on this trade, up 6.82%, and we'll just see what happens. But if it does get to trailing stop level next week, then I will go into trailing stop mode. So very happy for this trade, and just a good example of why I like to trade multiple time frames. Speaking of multiple time frames, I also have a monthly trade on at the moment. I did buy this. This is Love. This is Southwest Airlines. I bought this back on the 31st of January. What were my entry signals? Well, we had a V2. Earlier I talked about a V1, but we had a V2, which consists of 3 bars. Bar 1, bar 2, bar 3. Bar 2 goes below bar 1's low. Bar 3 closes above bar 1's close. That's the entry signal. My stop, halfway of the washout bar, just like on the LAG trade that I just took, same thing. That should hold. I place my emergency stop down here. I place my trailing stop up here. I position size based upon volatility. Position size on a monthly is going to be very small, small number of shares, because the moves are so large. So you have to counter that by taking a smaller amount. In this particular situation, just go through it one more time. $50,000, 1%, $500, $500 divided by the value of the 2 ATR, 15.92, would tell me to buy 31 shares. So if 31 shares moved 15.92, which was the emergency stop, that would be your $500 loss. Huge percentage wise, but dollar loss, no, because you're position sizing based upon volatility. So I will make my decision at the end of the month. Any close below halfway the washout bar, I will get out. This particular trade down, but well off of its lows. This particular trade down 3.15%, but had a nice rally and a nice comeback. So that is it. All right, so we have Apple on the daily with the rejection of the 200, up 5.2%. The SPY signal rejection of the 300, up 2.13%. Leg, just like down 0.2%. I don't even know if I can measure this. Let's see, because I bought that just on Friday, down 0.14%. It's okay with the new trade. Then Facebook on the weekly, up 0.23%. IWM on the weekly, up 6.82%. And then Love on the monthly, down 3.15%. So those are the trades that I took, the new trades and the current trades. And like I said, a little later in the podcast, we'll go down through the watch list and we'll see if there's anything that I would be interested in, any levels that I would look for next week. But yeah, very glad. Had a nice trading week last week and glad the market rallied. Okay, so listen. Actually, I failed to do that. Let's see. I want to have. There we go. All right, so earlier in the podcast, I talked about trader psychology, how important it is. There are a lot of great channels on Twitter and Facebook, different groups, and these individuals spend the time to put out good things for us to read, good trading words of wisdom. And one of my favorite is Akil L. Stokes, and you can follow him on Twitter at Akil Stokes RTM. Akil Stokes RTM, or just look him up, Akil Stokes on Twitter. Seems like a really nice guy, posts great information. He's a trading coach, mentor, appreciate what he does. And let's see what he has to say. Too many traders give too much power to a setup and convince themselves that just because it appears, it has to win. When it doesn't, they become an emotional wreck, which leads to all sorts of other problems down the road. Do yourself a favor and give both yourself and your time and your setups time. So he is quoting from Peter Brandt. Peter Brandt, of course, very famous trader, was just highlighted in the most recent Unknown Market Wizards. And let's read what Peter has to say. When trading chart patterns, set your expectations low and prepare for many patterns that look good, then fizzle. But there are 10 or so that end up working, and often staying with these trades is the difference between a really good year and treading water, from Peter Brandt. So yeah, most of the entries that I take, the setups that I take, are going to have confluences of signals. They're going to look good, but they don't all work out, right? But the key with trading is risk to reward ratio. If you're wrong, and you'll be wrong very, very often, just get out with a small loss. If you're right, like Peter Brandt says here, some of those are going to end up working, and they're going to end up working big. And those big wins are going to be what pays for all your little losses and then some. So, be very impatient with your losers. Be very patient with your winners. Most traders, the opposite. They're very patient with their losers because hope springs eternal, right? And they think it's going to come back. And then they're very impatient with their winners because it feels good to take a profitable trade and take it off the board, and the stress is off and so forth. But you're doing it exactly the wrong way. You can't have huge losses and let those grow and then cut your winners very short. The math just doesn't work. You have to do it the opposite way. You have to cut your losses quickly, and you have to let your winners run. And just because you have a perfect setup, it doesn't mean it's going to work. If I go back here to this LEG setup, my trading partner, Ava, and by the way, you can find Ava. She's an amazing woman and an amazing trader. And if you could do a favor, let me just share this over here. Go follow Ava. She's at Presence Trades on Twitter. Just a wonderful trader. Boy, does she know her stuff. And follow her, support her. Ooh, look, she has 804 followers. That's great, Ava. But Ava did point this out to me at the end of the day on Friday. Look at this beautiful setup. And it is, right? Higher low, bullish engulfing bar, V1, MACD's green. It's a great trade. I saw it and went, ooh, I like that trade. So that's why I took the trade. But it doesn't mean it's going to work out, right? I have to adhere to my stops if it closes below halfway of the washout bar. So again, as Akil said, as Peter Brandt says, you might have a great setup. Everything might line up. All the stars align. It still doesn't mean you're going to have a profitable trade. And a lot of people out there go, oh, this is such a great trade. It's such a confluence of signals. This one's got to work. It doesn't mean it has to work. It's more likely to work, but it doesn't mean it has to work. So don't fall in love with it. Don't marry it. If it hits your stop, any kind of stop, get out, keep those losses small, keep your powder dry. But as Peter says here, but there are 10 or so that end up working, and often staying with these trades is the difference between a really good year and trending water. So thank you to Akil Stokes. Appreciate that. And like I said, please follow Akil. And let's see. Sorry, I should have done this earlier. Let's see. And we'll put this, here we go. Here's Akil as well, at Akil Stokes RTM. Great channel, posts good information. Thank you for that. And then also thank you for Ava. And we'll go back one more time to Ava. And you can follow Ava at Presence Trades on Ava. So thanks to Akil, thanks to Ava, and thanks to Peter Brandt. Okay, so hopefully that was helpful. Before we start looking at potential trades for next week, I did mention my buddy Frank. You can follow him at Franco D over on Twitter. Great musician, great poet, great author, great journalist. And when I had the live stream, where we did the live stream every day, he was there every day, wrote the poem, fantastic. But let's read today's market poem. Markets are no different than day or night. They spin a cycle between dark and light. Traders make choices to do as they might. It's all part of the journey between wrong and right. Isn't that great? Let's read it one more time. Markets are no different than day and night. Or in other words, the opposite. Things go up, things go down. They spin a cycle between dark and light. They go up and down. Traders make traders make choices to do as they might. It's all part of the journey between wrong and right. And what I take away from that is your losing trades are wrong, your winning trades are right. Cut those losing trades quickly, be patient, wait for a new setup, and then have a complete trading plan to the upside if you're right. And I do want to point out, I'll talk about it a little bit at the end of the show, but I do teach private one-on-one lessons in the evening time via Skype. I teach you all 5 of the different trading approaches that I use. They're all based upon good trading principles. They're all based upon maximizing your wins, minimizing your losses. The reason I mentioned this, we threw in a higher low V1 today. We haven't had higher low V1s today for a while, so you might think, well, I don't know how to do that. Well, couple choices, right? Like one, you can do one-on-one trading with me. All you have to do is email me. We'll have a Skype call. We'll get it set up. Or I also, on my YouTube channel, I have a playlist called Lessons, a lessons playlist. There is a video in there where I talk about V1, V2 entries. It's a great video. Go check that out. It's totally free. And you'll understand more of what V1s and V2s are. So thank you very much, Frank. Please follow Frank. Support Frank at FrancoD over on Twitter. All right. Well, let's get in and take a look at some potentials for next week. Now, I'm going to go down through here. If something looks like it's close to possibly triggering next week and that it's of interest to me, I will mark it. If it's way away from any particular levels, I won't mark it. And I do want to mention, if I mark 15 different stocks here today and they all trigger, I'm not going to take every trade. I only take one trade per day. That's what I do. I like to stagger my trades in. I don't want to get whipsawed and take 5 new positions and then the next day they all stop me out. I don't want that. So yeah, I'm probably going to mark more than one, but it doesn't mean that I'm going to take every single one, right? So let's start off with Apple. Well, Apple, I'm already in Apple. In the future here, a 520 crossover is a legitimate trade on Apple. That's still going to take a while to happen, so I'm not going to mark anything. But if Apple did, for whatever reason, come back next week to the 200-day moving average, I would re-enter again. Or if I didn't have the position, I would re-enter. I don't know if that's going to happen, but I'm not going to mark Apple here because I am already in. Adobe, like everything else, had a nice, look at this, under 30, over 30. That would have been your entry signal, would have worked out well. Where it is here right now, I don't see anything really for next week. We do have earnings coming up. I never hold through earnings. And a lot of the charts here, because of the current market structure, I'm probably not going to be marking a lot because we've already triggered our deep dip buys. But we'll see. Hopefully we'll find something. Silver. Well, we had the big move up in silver. We came back down. We bounced at the 200-day moving average. So you might ask, Greg, if you bounce at the 200-day moving average, would you take it again? Actually, I would not, because I did a back test on AGQ. I'm using this from etfreplay.com with permission, but I back tested what are the results if you buy off of the 200-day moving average. Well, here it is, AGQ, 200-day moving average, simple, day of cross. If I run the back test, I want to see that there's some kind of edge in buying off the 200. Well, if we look at the results, there's not. The return is minus 53.7, a little better than buy and hold, which is minus 64.1, but it does not have an edge. So even if AGQ comes back down to the 200-day moving average, I wouldn't buy it just solely based upon that. If I had a V1, a bullish engulfing bar, something like that, I might consider it, but I'm not going to mark AGQ here because the 200-day moving average does not backtest well. AMD. Well, AMD does backtest well over the 200-day moving average. Nice entry signal back here under the 300. So I will mark AMD for next week if we can get above the 200-day moving average and get the support below us. So it's very likely that this could happen. A couple days ago, it got above, then closed below. If it closed back above, I might consider, so I will mark this. Amazon had a huge move up. Look at this huge move. Now, there's a 200-day up there. There's a 250. There's a 300. Would I want to buy if I had a close over the 300, the 250, or the 300, the 200, 250, or 300? No, I would not. I have a rule. I'm never going to take a close under over one of the major moving averages if it's above the second Keltner channel. About 88% of prices fail at the second Keltner channel. About 92% prices fail at the third ATR channel. So no, this does not look like something I would buy, so I wouldn't mark it. I mean, if I'm honest, if it rejected these moving averages, I would probably short it, but I want to focus on the long side. So I don't see anything here on Amazon. ARC Innovations, don't really see anything here. I know the moving averages are well above because ARC Innovations has moved down so far. My gosh, look, the major moving averages are up here, so I don't see anything on ARC. Boeing, we hit the lows, we bounce off the lows. I don't see anything in particular in Boeing that looks likely for a trade next week. Alibaba, look at this, everyone. Holy hamburgers, just down, down, down. Nobody wanted it. Nobody wanted it. Then China came out and talked. And look at this huge rally. My gosh, what is this off of the lows? Well, I guess off of the lows, we are up a mere 48.72%. Wow. Don't see, I mean, that's a huge move. Congratulations to anyone that had Alibaba. But I do not see any particular upcoming trades next week for Alibaba. Berkshire Hathaway, big, huge move up here. Don't see anything that interests me for potential for next week. Bitcoin, we had a 520 crossover on Bitcoin. That's 520 crossover on Bitcoin, I believe, does backtest well. If you're Bitcoiners out there, that 520 crossover is a good sign. But I really don't trade Bitcoin too much on daily swings. So, but it's a good sign. Nothing I'm going to mark. Anheuser-Busch, Budweiser. Big move off the low, obviously here. We had a 520 crossover that does not backtest well on Budweiser. If we got up to the 200 or the 300, I would not take that either because it's up in the second, third ATR channel. So nothing on Budweiser. Beyond Meat had a huge move off the rally, but I'm not going to chase this here. I don't see really anything that would interest me in Beyond Meat. Caterpillar. Oh, this hurts every time I see this chart. I bought right here with it under 30, over 30. Next day, I followed my rules, stopped out, and then it just went to the moon. My goodness. For me to get interested in Caterpillar again, I may have to have a pullback to the 200-day moving average. Really don't see that happening, so I'm not going to mark it. Cameco, really huge, strong move here. Very, very, very strong, making higher highs, making higher lows. Pullback to value would be interesting, but nothing really actionable that I can see for next week. Carnival, as everything else, big move off the lows. And under 30 over 30, that was the place. Look, under 30 over 30 would have worked out really well, but I don't see anything next week for Carnival. DoorDash, whew, rejection of that low, big move up, 520 cross. Just not going to chase here, right? For me to get interested in about anything next week, it's going to have some kind of a pullback. So nothing on DoorDash. Dow Jones, well, if we were to come back and backtest that 300-day moving average, which certainly could happen next week, there would have been a legitimate entry on Thursday because we had to close under, close back over the 300, would have been up slightly, but a higher low pullback to the 300-day moving average would be of interest to me. I wouldn't buy a break over the 250 because it's the second ATR channel. I wouldn't buy a break over the 200, but a pullback, some kind of rejection of the 300 next week, yes. So I'll mark that. Disney, really don't see anything here on Disney. DocuSign, big, huge move up here. Certainly not going to chase this. I don't see anything likely for next week. Etsy, same with Etsy. Don't see anything there. Facebook, well, I did buy Facebook on the weekly on Friday, but as far as the daily seems overbought to me. Some kind of pullback into the value zone is where I would get interested, but I'm just going to leave Facebook alone. I don't see anything on the daily for next week. FCX, nope. There are going to be a lot of these nopes here today. Fiverr, big rally. Don't see anything there either. Gold, gold, yeah, I would certainly buy gold if we got back down to the 200 or the 250 or the 300, but as it is here right now, I don't see anything likely. We did come into the value zone. We have moved sideways for a couple days. If I get a V1 or a V2 next week on gold, potentially interesting, but I don't think I'm going to mark that. GNRC, 520 crossover there. Wouldn't chase that with that structure. I don't see anything there. Google. Well, Google had lots of entries. Look, we had to close under, close over the 300. That would have worked out. We had to close under, close back over the 250. That would have worked out. We had a 520 crossover on Friday. So Google is very strong. We had the 200-day moving average as resistance. I will mark Google in order, or in case two things happen. If we have a close over the 200-day moving average, I would consider it because it's not over the second ATR channel. But ultimately, I'd like it to come back and retest that 250, which is right here. That seems like in the realm of possibilities. After this big move up, a pullback would seem normal to me and healthy to me, so I will mark Google. Goldman Sachs, 520 crossover. That does backtest well. It didn't take that because I took the other positions here. Don't really see anything on Goldman Sachs. Home Depot. Well, Home Depot back on the 15th had to close under, close over the 300. That would have worked out really well. We can mark Home Depot if we have a little bit of a back test and a check back with the 300-day moving average. I would buy some kind of rejection of the 300, so I will mark that. IBB on the daily, very, very strong, but extended. I don't see any good risk to reward ratio, so nothing interesting there. INDA could potentially close over the 300-day moving average, but it's too high in the channel. It would be above the second ATR channel, so I will let that one go. Intel, nope, don't see anything there. Russell 2000, of course I have this. It's been a great trade on the IWM weekly charts, but on the daily charts overbought. I don't see any levels there. Johnson & Johnson. Yeah, a pullback to the 200-day moving average would be great, give you a good risk to reward ratio, but I don't see that happening, so I won't mark. JO, which is coffee. You know, potentially, if we were to get back down to the 200-day moving average, I would be interested in that. So I will mark JO, especially after this huge big sell-off, looking for some kind of support of the 200 or bounce. CarMax, don't really see anything on CarMax either. Like I said, a lot of these charts are just overbought here. Coca-Cola, nice move up here, but it doesn't look like anything likely next week would trigger. Lockheed Martin, I like that we've pulled back into the value zone. Here we had this huge move up. Last time we were in the value zone, that's where we had the move up. Now we're back in the value zone. Now we are consolidating, but I think I'm going to leave that one alone. Southwest Airlines, I have that on the monthly. I don't see anything on the daily. Lyft, you know, 520 crossover. Let me see if I can back test Lyft here with a 520 crossover. I'm not sure this is going to have it. LYFT. Oh, we do have it. Great. And then we'll use the crossover of the short would be 5 and the long would be 20. And that's the EMA. So let's back test that. Negative 21.5% return. So I'm glad I back tested that. So yeah, 520 crossover does look like it could potentially happen next week, but using the back test, it does not back test well. So I'm not going to mark that. MasterCard. Yeah, well, look, we're coming up to the 200-day moving average, coming up to the 300-day moving average, 250. Depending, yeah, if it closed over the 300 or the 250 at this level, I would be interested, so I'll mark. McDonald's had to close over the 300-day moving average. Let's back test McDonald's, everyone, and see. MCD over the 300. Simple. Run the back test. Yes, it does back test positively. So yeah, on McDonald's, it's already moved above the 300-day moving average. I'll mark it. If we come back, backfill, retest, then have a better risk to reward ratio than here, I would buy it. So yes. Merck, pull back to the 200 would make sense. I don't know if that's likely, so I'll skip. Morgan Stanley did close above the 250-day moving average on Friday. It's a little high here. Pull back to the 300-day moving average would be interesting, so I'll mark that. Microsoft, it did close over the 200-day moving average. So if we had a pullback and then a close back over the 200, it would be interesting. It does back test well. I will mark Microsoft. Netflix, nope, don't see anything there. Nike, really don't see anything here. NVIDIA, wow. Boy, was that a good trade with the close under and back over the 200-day moving average back on the 16th. Would have been a great trade. I wouldn't chase it here. If NVIDIA came back, retested the 200, might be interesting. So I'll mark it. Pfizer, no. PKI, not really. PLTR, nothing. Philip Morris. Well, interesting on Philip Morris. We did back test the 300-day moving average. I was considering buying this. If we have another retest of the 300 or a close under, close back over, it would be interesting. So I'll mark. PayPal, big, huge up. Not going to chase that. Qs, well, we did have a legitimate entry on the Qs on Friday. We had a 520 crossover. It does back test well. I don't like the structure. I don't like to buy crossovers after a huge move up. So I really don't see anything on the Qs at the moment. A close over the 300 would make sense, but I don't want to buy after that big of a move up. So I'm not going to mark Qs. Rio Tinto has had a really nice day up here. Congratulations, Ava. I know she bought this with the rejection of the 200-day moving average. Great entry, but nothing right now. Shopify had a nice under 30, over 30 that really took off. Again, these are all deep dip buy approaches. SIVB, nothing. Silver, nope. Snapchat, don't see anything there. Virgin Galactic, big nice move up here, but where it's sitting, I don't see anything that's interesting for next week. SPY, of course, I already bought SPY with a close over the 300. If it closed over the 200, that could be a potential. It's really stretchy and chasey to me here, so I'm not going to mark SPY because I already have it. Teladoc, I don't see anything there. Teradyne, do not see anything there. Bonds, don't really see anything there either. Tesla's had a big move. If we came back, retested the 200-day moving average next week or the 300, I would be interested with a little bit of a check back backfill. So I'll mark that. Twitter, no. Unity Software, nothing. United Airlines, don't see anything there either. UNG, pull back to the 200, but it doesn't look likely. UNH, no. Oil, come back into the value zone, don't really see anything there. The dollar, pulling back into the value zone, don't see anything there. VIX had a crazy week being up. I've never seen the VIX move that much in my life. Got up to $41. 3 days later, we're at $24.75. Don't see anything there. I believe if we were to back test the VIX off of the 200, let's see what that would look like. No, has a negative return. So I'm not going to buy off the 200. Verizon, oh, well. An under 30, over 30 might be interesting, but I don't see any other well, that's not true. We could have an under 30, over 30 with a test of the negative third ATR channel. So yeah, that's potential for next week. Walgreens, no. Walmart, retest of the 200 might be interesting. We can mark that one. XLE, which is energy, well off the highs. I don't see anything there. XLF, really nice trade off XLF with a close under over the 300. You don't get to the 300 SMA very often, and this one worked really well. A back test of the 200 could be a potential, so we'll mark that. Real estate does not back test well, so I'm going to skip that. Utilities here, nice close under, close over the 200 that worked really well, but I don't see that likely for next week. XLV, nice move off of the 200. You need a pullback, but I'm not going to mark that. Exxon, no, and Zoom, no. So let me go back here to my flag symbols and see what we're looking at. All right, so these are the stocks and these are the levels that I'm going to be looking at next week. I'm not suggesting anyone take these trades. This is for me, but I'm just showing you what I'm looking for. AMD, either a close over the 200, that would be a valid signal. If it came back, retested the 250, that would be a valid signal. If it came all the way back to the 300, that would be the valid signal. So again, it needs to move higher above the 200 for me to get interested, or lower, rejection of the 250 or rejection of the 300. So AMD looks fairly good next week for potential entry. The diamonds, which is the Dow Jones, if we had a pullback and retest of the 300, that's the one I would be looking for. Google, ultimately what I'm looking for here is a retest next week of the 250 or the 300. Home Depot, retest of the 300 is what I would be looking for. I wouldn't be interested in the 200 if we close back above because it's too high in the channel. Retest of the 300. Coffee, if we tested the 200-day moving average is what I'd be looking for. MasterCard, potentially if we got over the 300, that would be of interest. McDonald's, if we retested the 300 below, or we closed above the 250, or we closed above the 200. So this has to move higher or lower for me to get interested in next week. Morgan Stanley, a pullback and retest of the 300. Microsoft, a pullback to the 250 or the 300 is where I would be interested. NVIDIA, pullback to the 200. I don't know if we're going to get there, but it would be a good risk to reward if it did for me. Philip Morris, another retest of the 300-day moving average, or a close under, close back over. Tesla, a retest of the 200, the 250, or the 300. I don't know if any of these are going to happen, but I'm just pointing out that's what I'm looking for. Verizon, if I could get a confluence, an under 30, over 30, and rejection of the negative third ATR channel. Walmart, a retest of the 200 or the 300. And then lastly, XLF, retest of the 200, the 250, or the 300. So I hope that helps. Not as many symbols to look at next week because of the big move we've had, but these are, for my sake, legitimate levels next week for me to look for. So listen, so I hope this helped. I mentioned earlier in the podcast that I do teach private one-on-one lessons. I love to teach. I'm good at it. I have taught people from all around the world for many years now. I teach all 5 of the different trading approaches that I use. I teach you step by step exactly how to go through it. It doesn't matter if you're a beginner or an advanced. The lesson course is 15 hours, 5 sessions, each session 3 hours. That's where you get your 15 hours. And it's very important to me that my students succeed. And that's why I teach them step by step exactly the approaches to use. Lately, we've been using a lot of deep dip buys because that's what the market structure has been. We've been going down, right, because of the conflict and interest rates and all this kind of stuff. But there, I teach you trend trading approaches like moving average crossovers. I teach you return to values, mean reversion trades, V1s, V2s, double bottoms, bullish divergences. So I have a tool to use in the market regardless of what the market's doing. So the course does cost $1,750, but it's worth every penny. For you to really get good at something, you should have a coach that really understands what you're doing. And the one-on-one approach, I believe, is the most effective, whether it's trading, whether it's guitar, whether it's ice skating, right? And so, if you're really serious about learning the skill of trading and learning correct trading principles, I will do that for you. I will teach that for you in this course. So if you are interested, the first step, just send me an email. The email is in the link of this YouTube video. And reach out and say, Greg, I'm potentially interested in taking your course. I will say, that's great. Let's set up a Skype call. The Skype call is free. It's not a sales call. I promise you. I just want to get to know my potential new student. I want to learn more about their trading challenges, their goals, what they're hoping to achieve. And then it's also a great time for that student to ask me any particular questions about the course. So, and then when we're done with the call, you just think about it as long as you want. And then if one day you wake up and you say, hey, today's the day I really want to learn this, I'm going to email Greg. Email me. We'll set up a time, we'll set up a date, and we'll get started. But I know you're going to be happy that you took this course. Secondly, as an alternative, I do have a great online video on udemy.com on deep dip buys, which has been very relevant topic lately. Deep dip buys, you would have done pretty well here in the last week using that. It's a great course. I've sold a lot of them all over the world. I've had such good feedback, such good reviews of that course. And I get them every day. And it's a great course. It's 9.5 hours of video. It's 26 videos total, 15 study guides. And the best thing, it only costs somewhere between $12 and $15 over on Udemy. And the link's in the description of this YouTube video if you'd like to go and take a look at that course. But I know you're going to be happy. It's worth so much more than $12 or $15. And you'll see if you do take the course how a lot of these trades have happened for me lately using the deep dip buy approach. So if you're interested, links in the description. spend the 12 or 15 bucks and learn a lot, because there's a lot of content in the course. And then lastly, if you like today's podcast, if it's helpful for you, if some of these topics and principles of correct trading are helping you, all I ask is that you hit the thumbs up button if you liked it and if it was helpful. It helps YouTube know that there's some valuable content, helps them get out to share it more. If you share it on Twitter or Facebook, I would appreciate that as well. A lot of traders out there struggling with trading, and I'm hoping that by doing this podcast each week and showing you how I'm managing my trades, what I'm looking for next week, I hope this is helpful. That's why I'm doing it. All right. So that's it. One-on-one course, that's available. Online course through udemy.com, that's available. And if you could hit the thumbs up button before you take out of here and enjoy the rest of your weekend, I would really appreciate that. But I do hope you have a great weekend, everyone. I appreciate you spending the time. Hope it's helpful. Try to go out and do something nice for somebody today. I mention this in my live stream all the time, but please try to do one nice thing for another human being each day. It would make the world a better place. If you could also go out and do one nice thing for an animal each day, it would make the world a better place as well. I was raised with many animals. I'm a huge animal lover, and they appreciate acts of kindness as well. And hopefully one day someone will be there if you need it to give you that act of kindness. So have a great weekend. Get some rest, get some exercise, be good, be safe, drive safe, all that kind of stuff. And if you have any questions, leave them in the comments below. I'll do my best to get back to you. And so thanks for spending the time, everyone. And on the way out here, I have to run the U.S. legal disclaimer. So take care. Great weekend. Hope you have a good trading week next week. And we'll talk to you soon. Thank you so much. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.